All right. So I just think that's an interesting, more facts and thoughts to think about. Fidelity created this, by the way. Okay, so what does it mean for Bitcoin to monetize the world? What do you think that means?
I mean, the way I interpret it is like Bitcoin encompasses all of the value of the world, I'm guessing.
That's a good
So,
way to
like,
put it.
okay.
Oh, sorry, go ahead. What were you going to say?
I was gonna say, like, there is no, like, well, I guess there could be other currencies and stuff, but it would all
Yeah,
be like, it would all go back to Bitcoin.
right. It would be the central. It'd be the central way to measure all the value of economic value. So, like, the way I think about it is all the Bitcoin ever, if it monetized the world entirely, that would mean that if you somehow had every single Bitcoin ever, you'd be able to purchase the world with it. Does that make sense?
Right.
But I mean, I think there's nuance
You
there.
mean all of the assets of the world?
Correct. Yes, you'd be
Right.
able to purchase theoretically when we're talking about monetizing the entire world. You'd be able to take Bitcoin and purchase every single currency, purchase every single every single stock out there. That would be monetizing it entirely. Does that make sense?
Yes.
Okay. So I think we're on the same page there. So this is what I put: 14 million Bitcoin. That's what we're going to go with that number because it's technically more realistic. Must be able to buy every single asset on Earth, which sounds crazy. Which I'm not saying this is going to be true. This is just some people think it's going to be. So it's kind of interesting to think about. Okay, so this is a table I put together. So it's the breakdown of all of the assets on Earth currently. So financial derivatives. Do you know what I mean by financial derivatives?
I'm like financial companies and insurance companies and whatnot.
That would fall more in line with equities.
Okay.
Actually, financial derivatives are like options and
Okay.
like puts on a company, calls on a company. Paper gold is a financial derivative. So anything
Okay.
that's deriving its value from something that actually has value,
I see.
which is kind of scary to think that 1.3 quadrillion dollars is in an asset that's derived from another asset. Do you get what I'm saying?
And yeah, it's the majority.
It's kind of scary, actually.
Yeah.
When I found this number, I was like, so $1,300 trillion, the vast majority of our wealth, or quote unquote wealth, dollars, are in things that are based on things.
Right.
So I was like, well, that just doesn't sound right. I don't know all the technical reasons why, but that doesn't seem good.
Yeah.
Global real estate is 365 trillion. That's all the buildings. That's all the like all the buildings, houses, everything across the entire world. This is worldwide, by the way. Um,
Okay.
oh yeah, and also that was one of the reasons why the housing bubble happened is because they had like all these derivatives based off of mortgage-backed securities. So that was the underlying asset for those derivatives was mortgages.
Then people couldn't pay their mortgages.
But think about what that. But think about it for a second. What in the world? So mortgages are loans to regular
Right.
folks. It's just God. It's just so crazy to me. But anyways, money supply. That's like all the dollars, like cash on hand, savings accounts. And I think there's more stuff in there too. But that's like hard. That's like dollar bills. So that's like, and I think it also includes loans. I don't know exactly all the, but think of it as just like cash basically.
The money supply would not include gold.
No, I got that
Okay.
separated. So that's like all the bucks out there.
Okay.
125 trillion dollars. Equities 110 trillion. Also, there's something to point out. I didn't include like Chinese currency and all the other currencies and all that kind of stuff. So I didn't include like I didn't go too crazy with it. That money supply is the U.S. dollar.
Okay.
So technically, it might be a little more, but there's like 60 countries that are pegged to the U.S. dollar, so it's a pretty good a way to measure it. Precious metals. That's $15 trillion, and that includes gold. Gold's at about 12 trillion, roughly. And there's stuff like silver and all that stuff. I added all that up. It was like 15 trillion. Cryptocurrency is roughly 2 trillion right now. BTC is actually more like 800 billion, but it was at a trillion, but it's roughly a trillion. And crypto overall is 2 trillion roughly. Fine art and other collectibles, I found some data and it was roughly like a trillion. It's not that much, but it's still worth like pointing it out. So the total is $1.918 quadrillion, or $1,918 trillion is the total outstanding. So that's a lot of money. I was actually kind of surprised at the number. Does that number seem crazy to you, or what do you think?
It seems high.
Well, Apple as a company is worth 2.2 trillion. So it's just a small little nothing compared to the world's assets, if you think about it.
Yeah, I mean, that's less than 1%.
Yeah, and the equities, what I mean by equities, that's like the New York Stock Exchange, like all the NASDAQ and stuff, all of the Australian Stock Exchange, Japanese, China's Stock Exchange, like all the stock exchanges of the world combined is 110 trillion. So this is like what's weird to me is that there's only 110 trillion dollars in all the public companies. Oh yeah, that was something I forgot too. Is private companies. I didn't even include that in there, but there's money there too. But then there's like financial derivatives, which is money derived from like stocks and other random things, is 1.3 quadrillion. So you could almost just think of this as like debt almost.
Right.
It's just like weird. It's just stuff's vastly. I mean, and if you think about it, like there's so much money in bonds too, and bonds to me, I think bonds are part of this financial derivatives that would be in that bucket. Like that's like debt, You're buying debt and getting a percentage of it. So I don't know. It's just weird to me that there's that much money out there in those things. But anyways, if you break it all down, here's the percentage of the total assets. That's like a percentage of the total. So cryptocurrency is only 0.01% of all the world's assets. And then I broke it out in that 14 million Bitcoin. So we got 9.52 billion Bitcoin are the derivatives. Global real estate is 2.6 and so on. And it gets lower and lower. So that's the amount of millions of Bitcoin that denominates each of these categories. Does that make sense?
Yes.
Okay. So the current price of Bitcoin in US dollars, if totally monetized, 137 million. So I got to that $137 million by taking 137 million, by taking the 14 million Bitcoin, taking this $1.918 quadrillion and dividing it by the 14 million Bitcoin. Does that make sense?
Yeah.
So I did that and I got 137 million. So it's 137 million just divided by $47,000, which is about where it's at right now. That means 2,915 potential if the overall goal of Bitcoin is realized. Does that make sense?
I'm not sure I'm following. Okay.
Okay, so let's backtrack for a second.
Okay.
Let's say today, so all of a sudden, Bitcoin becomes totally monetized. It just happens magically. It's not going to magically happen. It's going to take a long time. But let's just say it magically happens. That means everything all the Bitcoin in the world, which is really roughly 14 million Bitcoin, has to be able to purchase everything. Right? So you would find how much does a one Bitcoin cost? That would be take this number here, divide it by this number there.
Okay.
That gives you $137 million per Bitcoin.
Okay.
So I took the 137 million and divided it by the current price, and I'm saying the potential of the pie of the sky potential of some of these people are saying it's got this much potential. About 3,000 potential, 3,000x potential.
Okay, I understand.
That's why I got more interested in it, because I started hearing those numbers and I'm like, I don't actually think this will happen, but if the edge case of that does happen, that would be insane. If you have one Bitcoin, you have 137 million. equivalent dollars. Like dollars, I don't even know how that would work. And it doesn't necessarily mean also that the US dollar doesn't exist anymore. It just means it's pegged to the Bitcoin. That's all that it would mean. It would mean all the different currencies of the world pegged to Bitcoin and how it's priced. Does that make sense?
Right. So it would be backed by Bitcoin.
Right. So I want to talk about that in a minute, but I wanted to go through one more. This is just kind of illustrate how this works. So here's the breakdown of all assets on Earth in 2042, so 20 years from now, assuming 5% inflation. So everything inflates like almost 3x because of inflation. And honestly, this inflation number is low. I just picked a number. So the total assets goes up to 5 quadrillion compared to the one whatever. But here's the key point. You see those Bitcoins? They stay exactly the same. Because that's not going to inflate. Do you understand what I'm saying?
Right, yeah. Because the number of Bitcoins doesn't change.
Correct. So 2042 price, if blah, 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 if say it happens in 2042, which if it was going to happen, that would be more realistic than happening today, obviously. Then the price would be $363 million, 7,725x potential in 20 years. Just pointing it out, if not, it's not financial advice, but it's just a thought if this does, if the dream is realized, as I've been putting it. So that's also just to show how inelastic the supply of Bitcoin is. Like, this will always be the same amount of Bitcoin. This is what changes because there's printing of the money.
Right.
Yep. So, okay. So I put this together. Like, how will life be different if that actually happens? Like, what's the first thing that comes to your mind in terms of, like, if everything's back to a Bitcoin, like, how does that change how you do your savings and your investing and that sort of thing? Remember, you don't have to worry about the dollar inflating because the dollar is backed by Bitcoin, so your money's not going to inflate.
Right. So supposedly you wouldn't have to. What was it that we were talking about one day where, like, shouldn't the money or the value of Bitcoin just go up, like,
yeah,
on its own?
Right, because inflation is this made up thing where the more money's printed. Okay, I'll put that in a bad way. Inflation is caused by money being printed and supply shocks and different things like that. It's the monetary debasement, and I kind of use inflation a little bit not correctly. Inflation does not necessarily mean just money being printed. Inflation could also, like, the oil inflated because of the Russia war, you know? Right. So inflation is a combination of supply shocks and different things like that, and also printing money. So inflation is a combination of those things. So debasement is the money supply going up and debasing the value of your dollar today, which leads to inflation because there's more money going around than there was before, and that same amount of money has to be able to purchase the same amount of goods and stuff. Does that make sense?
Right, and so over time, and the overall value of the assets of Earth would increase. I mean,
right.
That's in general, that's how it works.
Because of technology.
Right. And so with that, just the passage of time would increase the value of your Bitcoin.
Correct. Because, okay, let me go through these and we'll keep talking. Assets will become deflationary in terms of dollars over time because assets are pegged to a non-moving, inelastic supply technology called Bitcoin. That's what I'm talking about. So your one Bitcoin will be able to buy, we'll say in the future, it'll buy a house. 1,000 years in the future, it'll be able to buy a house and a spaceship. You see what I'm saying?
Yes.
That's the cool thing about this. So as technology increases, everyone will benefit from these fruits because a dollar, I should have said a Bitcoin. I guess it'll be dollars potentially, and you might convert it to Bitcoin immediately because it's the true savings. But anyways, because a dollar earned and saved will be able to buy a bigger and bigger slice of everything. You see what I'm saying? So you're no longer, like, trying to escape inflation. You're not like, oh my god, I gotta put it into Apple, I gotta put it into something just to escape this inflation that's happening to me. You'll just be able to put it in Bitcoin, and it will get better over time because of all the innovations that happen naturally, anyways. Because Apple will continue to innovate and get bigger and bigger naturally, and that same amount of Bitcoin has to be used to purchase the Apple and the other stocks and stuff like that.
Well, I do have a question.
Uh-huh.
So the value of Bitcoin is going up, and so everybody is becoming more rich. So, like, wouldn't it be offset, kind of? Because
Okay, I think I know what you're going to. Let me finish this real quick, and then I think I know what
okay.
you're saying. Supply of Bitcoin, the security of the network, and the mining of Bitcoin leads to the virtuous cycle. Okay, we talked about that a little bit. Houses and other goods and services will no longer be monetized. We'll talk about that in a bit more, too. I don't believe those will no longer be monetized, helping folks who actually need or want those goods. Okay, so I think what you're saying is, how can we just keep buying Bitcoin? Like, how are things going to get better? Are people going to invest their money? Is that what you're getting at?
Well, it's like if everybody's getting richer, it like is it just are they really getting richer, or is it just we're saying they're getting richer? If you
Okay,
understand what I'm saying.
I know what you're saying. So we're going to assume it's the future. Somehow this happened. There's 14 million Bitcoin has to purchase everything. So right now, you don't want to put all your dollars into a savings account, right? Because you know that's going to go down in time for sure, right?
Right.
And you don't earn crap for interest. So you put it into stocks, hoping to beat inflation. With that said, you're not really putting a whole lot of thought into the stocks you're buying. You're just buying big in indexes full of whatever because you're like, well, it'll probably at least beat inflation, right?
Right.
That's your thought process. So, in the future, that's going to put everything, if that happens in the future, that'll flip everything on its head. You'll no longer be like, oh my God, I have to invest it. You'll be like, I'll just buy Bitcoin and I will benefit from the technologies of all these companies that are creating it. And I will leave it in Bitcoin until I decide a company that I think will beat the overall technology rate. Do you understand what I'm saying? So if you think Apple in the future will actually is the most innovative company, you'll buy Apple. Or if you think Tesla or some other company is the most innovative company, you'll buy that. Because at that point, you're not talking about beating inflation. You're talking about beating innovation. You want to buy the most innovative one. You're going to put a lot more thought into it because that's how you're going to get true gains in the future. And in reality, that's what you should be doing to begin with. But instead, you're concerned about beating inflation because, frankly, a lot of people don't, when they're investing in index funds and different in bonds or whatever they're buying, they're not really thinking, oh, I really want to own this stock. Like, I really care about having this stock and stuff. I'm just trying to beat this terrible thing called inflation. So I'm just putting it in there. And there happens to be a lot of companies in there that are crap. Does that make sense? That you are supporting
Yeah, that makes
because
sense.
you're just like, I don't have a choice. Just you're basically using it like a savings account. You're monetizing index funds essentially. So in the future, you'll be able to just create your savings, create your economic value. Like you work, that is value. You'll be able to keep your value and not getting debased because you'll always have the Bitcoin that is secure and the supply is limited. Does that make sense? So you get to keep your value. And then when you say, hey, I want to invest in myself. Hey, I want to go to college. Hey, I want to invest in the next big company because I think it's going to beat the other innovators. That's when I'll purchase that. So you're not going to just dump your money into indexes unless you think it's a fund that's really good. I mean, you might do that, but you're not going to be as haphazard about your dumping money into things. Does that make sense?
Yes, yes.
Because you're going to be like, hey, I've got this thing that's limited. It's not going to screw me next year. You know what I mean?
Right.
So
It encourages people to make good investment decisions, really.
which is a good thing.
Yeah.
That's another, I think a cool thing about the idea of it happening is because I think people will make better investment decisions, like you said, and they won't be so concerned about just trying to beat inflation. You know what I mean? You're not like
And
we're
that's like
invested.
the
You
main
know,
thing people think about, is
Right.
Like
Exactly.
like with the savings account, it's like if it doesn't do more than inflation, it's worthless.
Okay, so that leads me to my next point. So right now, me and you and a lot of people are just kind of monetizing index funds, but we're also monetizing things that actually really matter. Houses. We're like, oh, we're going to go buy rental houses and try to beat inflation that way, which is not a
Right.
good thing. Actually, that's a bad thing because that increases demand artificially for houses, which is why these house prices go crazy.
Yeah.
That's not actually a good thing. It's kind of a bad
Yeah.
thing. It would be better to allow the houses to be just like it's a house. You own a house. Why the hell would I buy more houses? It doesn't really do anything for me. And then ever people can buy houses if they want to. I'm sure there will still be real estate people, but leave that to the people who are really into it. Like everybody's thinking about, oh yeah, I'll just buy some more houses. Blah 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 blah. Like that's not. You know what I mean?
Right. I mean, there's a limited supply of land to begin with, and
And I'm not saying that's not that will still be a strategy that people will do, but they'll be actually thinking about it. They'll be like, "Oh, I'm going to buy in this market because this market's down." You know, "Oh, I'm going to do this one." They're not going to be like, "I'm just going to buy a house because I don't even know what I'm not even going to think about it that much. I'm just going to buy houses." You know, take more
right,
loans
right,
out for money that's free essentially, and just buy more houses, inflating the house prices. That way, people who are not so well off can't afford it.
right.
So that's not good. But I understand why people do that. It makes sense. I mean, it's just the world we live in. So you're trying to create wealth, and a way to create wealth that kind of rises with inflation is to buy houses, to buy goods, to buy index funds. You know, just whatever the hell you can get your hands on. It's better than keeping cash.
Yeah.
But it would decrease the need for that, and people like you and me, and people who are not as. I mean, I think we'll probably still be investing if it did happen because we think about stuff like that. But you know, your average mom and pop, they're just putting their money in their savings account at that point because they don't really care, and they'll get to keep that money, and it won't be hurting them over time.
Right. Yeah. Like it
It,
would enable people who aren't investors or whatever to be able to maintain their wealth.
correct. So, and if you think about it, like the price of bread is like what, $2? It depends on where you go. There's some cheaper places that have for $1, but that price is technically more. I think bread used to be, you know, it was definitely more than it used to be, but it has declined sometimes, and it's still pretty cheap relatively. But if you price it in Bitcoin in the future, this gonna be like nothing. You understand what I'm saying? Like it's gonna be like
Right.
nothing, and it won't be $1. It won't be the equivalent of $1. And over time, the price of bread will go down. It'll just keep going down over time because technology gets better and better. Does that make sense?
Yes. Yes.
I think that's a just some ideas to think about. Like, hey, this is actually a good thing if it did happen. Doesn't mean it will happen, but it's kind of cool.
Yeah.
Let me double check.
And the biggest thing to me is it, um not having to deal with inflation anymore.
Right. Because that what is that like we said, that means you're going to make better investment decisions. That means you can actually preserve your value and you benefit. Here's the other big point I don't think we really specifically mentioned, but we kind of implicitly did. You are benefiting from all the technology growth of the entire economy every single year. And that technology rate is roughly like 8%. That's like, you know, when Tesla making the electric car, that's a huge innovation. Um, Price decreases in bread because of technology. All these different technologies that makes our life. Amazon, that'll be another one. You'll benefit from all these things because technology is downward pressure on prices. So downward pressure on prices will actually translate to downward pressures on prices all the time because of the inelastic supply of Bitcoin. Does that make sense?
Right. It encourages everything to be cheaper.
Right, right. And some things do get cheaper, like TVs. The technology is just increasing so fast, it's beating inflation. Does that make sense?
Yeah. Yeah.
And that's why I saw you've seen such crazy spectacular growth in software companies is because they haven't been bogged down as much because of the physical, because it's not a physical nature to it. So you can innovate at the speed of your fingers.
Right.
That's why we've been able to. That's why technology beats inflation all the time, because you innovate so quickly, and it doesn't make sense to try to buy anything else in terms of trying to beat inflation.
Right.
So, anyways, not investment advice, but it's just this is what the idea would be if it did happen. So it's kind of cool to think about.